Hi, everybody. This is Gary Dean, and this is our video report for Monday, November 28th, 2016. So we saw the markets down today. Can't really even see it on the daily chart, but what it is, it's a stop from the market going up. I think that's really the best way to put it. Now, what I was saying that I'm kind of anticipating will play out is we're probably going to get another set of bearish divergences like that. So if that is the case, then most likely what is going to happen is we're going to start to get these choppy moves, and we're going to go sideways. Same as we did here, and then from that area is when we will see a deeper pullback, is when we start to see the technicals rolling over and the market's hanging up, and then we get a larger drop. So I had said that I was anticipating that we could get a back test of this bearish rising wedge. That's what took place. Now, the reason for the short-term bearishness that I have is the bearish divergences on the 60-minute charts. Plus, we have a wave count that is suggesting that we have a deeper pullback coming. So even if it does kind of chop around and we head down, we very well could see a move down to the 2182 level, maybe even the 2195. But that will be the churn area, like here or here. And then we could get, say that last pop before we get the bearish divergences on the daily chart. Now, the one I would say risk is we may not get a bearish divergence on the daily chart. So it's one of those things I would keep an open mind. If we do head higher, then it would most likely be setting up those bearish divergences on the daily chart. But if we if we head down and start taking out some support levels, then we've made a bunch of lows without bullish divergences, so we could make some kind of top without a bearish divergence. But we've seen it every single time. So assuming that we're not going to get one here, so far has been a losing trade. So like I said, I believe that we could see a pullback come somewhere into that 2195, possibly even 2168 level, and have it still be bullish, where it's just kind of consolidating before we get a pop up and we head into, say, the Santa rally. But this wave count and these bearish divergences are saying that I don't believe it's safe to buy up here, and most likely a better buying opportunity will be down here. But even that, you have to be a little bit careful, because you can see that the technicals are just starting to roll over now, and we have these really long bearish divergences, and we really haven't had any kind of break. So I would really love to see anywhere from the 2163, 2150 area I'd be looking to buy. I'm just not sure we're going to get there the first time. We may have to kind of chop around a little bit before say a larger pullback takes place. So if they head higher, then most likely we're going to see some resistance at that 2117, and then we have the 2121. So that's really about it on that. Here you can see it looks like just an ABC move, so it's not something to get overly bearish with. It's the biggest, say, challenge for the bulls are the bearish divergences on the on the 60-minute charts. Now, what the bears have to look, as far as a positive sign would be, this is a channel that's been in place for almost 2 weeks now. And you can see every time we hit the top of it, we came down, but we found support at the bottom. Well, we actually had a break of it today. So maybe we come down a little bit more, come back up and back test it. And again, it could be very similar to what took place on the daily chart, where it broke the bearish pattern but came back up and tested the bottom of it, but it made new highs. So it doesn't really negate the overall pattern, because when you see a back test of things, that's often that is what takes place before a larger move happens. And again, I'm not trying to build a long-term bearish case right now. I just think from where we are and the way we got here, it's not safe to be jumping on the long side, and I do believe that there's probably going to be more points on the downside than the upside. So anyway, that's really the big news, is that they broke this channel. I wouldn't get overly bearish right now. I think that the bears need to push it through this 2193, and then you have the 2182 and 2162 area or 63. These are your next support areas. So you want to take it one day at a time. Again, don't get overly bearish, but don't get really bullish up here, because it's a really dangerous thing to do, and anybody who has jumped on the bandwagon after a big move like that has gotten hurt really bad. So I would wait for the market to come back to us to buy, and just keep an open mind for either direction. So with that, have a great night, and I will talk to you guys tomorrow.